Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, June 14th, and I owe probably quite a few of you apologies. Apparently, I had some audio issues and was not aware of the situation, so I think yesterday's recording went out with any audio, just the video that worked. So my apologies if you tried watching yesterday's video, and today, luckily, I caught it this morning. So let's go ahead and take a look at with that aside, let's go ahead and take a look at today's economic news releases. We have quite a bit today. We had the NFIB Small Business Index, which came in a little bit lower, and then retail sales came in low as well, but it did exceed a little bit by expectations. Expectations were basically 0% and went up about 0.3%. A drop quite a bit from the previous months of 0.8 or 0.5%. So that's excluding the autos. Now you got to take, or the PPI, the core as well as the headline actually came in pretty tame. The headline the previous month was 0.8, and it dropped down to 0.2%. So that's actually good news. And then also the core, when you stripe out the food and energy, it comes in at 0.2 as well. So the headline and the core came in relatively tame, and that's actually really good news. So we got not so good news on the economic side of the retail stores. It did come in a little bit better what they anticipated, but still not that good of numbers. But you got good inflation numbers. And then wholesale inventories went up, or actually down from the previous one, but came in at expectation of 0.8%. Stay tuned for tomorrow. We're going to have the CPI report. That will be a big number as well. And then we got the jobless claims coming in on Thursday. Some headline news. I saw one with Manpower kind of reporting that they estimate better economic news for a third quarter. They're expecting jobs to improve coming third quarter, so that might set the expectations. What Bernanke has been saying, that jobs in the economy is not going to be as bad as most economists that are critiquing him. That maybe the jobs will start improving the later half of the year. So we'll kind of see how that plays out. But again, my ideal is that sometimes perception leads to reality. So if people perceive that the economy is going to get worse, it generally will, because people hold back from buying and kind of holding on to what money they have, and and when that happens, economy slows down further, and then hence the next thing you know, we're in a recession. So those are top of the things. Stock market's doing real well. They kind of like they're kind of overblowing the news releases on the retail sales. We had merger and acquisitions yesterday, so quite a few announced, from the Arby's sale to Honeywell's acquiring company. We had probably about 10 different merger and acquisitions announcements yesterday. So those are also kind of playing a part into where things are at. But they kind of like the retail sales and kind of feeling a little bit optimistic, I guess. But even though, again, it's a little inflated. So let's go ahead and take a look at the bond market and see how interest rates are doing. All right, so here's the bond market, and as you can see, we have a big opening gap from yesterday. We kind of closed upwards a little bit. We didn't close at the highs, which we bounced off this resistance here, but we have a big opening gap. We closed off the day at par 78 and currently at par 31, so a pretty big drop here this morning. And I do anticipate this closing, as we've seen in the past, even if we have opening gaps where we open upwards, it closed up pretty quickly. So tomorrow could be that day with the CPI report coming in, but basically the news that came out today should be more bond friendly, especially with the retail sales really not coming in that great and tame inflation. But for example, today is just one of those days where we're having one of those opposite day markets here, and right now we're kind of down a little bit. So basically what's going on is the stock market's taking money from the bond market based on what they feel is a little bit better expectations on retail. But these things always have a way of correcting itself up. But today interest rates are lower, improved. So the bond market's lower and interest rates go up. So they are a little bit higher today versus what they were yesterday. And hopefully we'll keep above here, so we close up above here, so we can use that as our floor and not bounce below. We want to try to remain above par 50 at least. So. All right, folks, you guys have a great day. Folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites. You're at obviously at Mike's Daily Market Report and MikeBjork.com.
even CaliforniaMortgageTips.com and the Mike's HomeBuyerUniversity.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases. So I can help you get pre-approved to buy that next home here. So thank you, and keep me in mind.